All right, we're back with another M1 Finance update. Obviously, it's been 2 weeks since I uploaded a video talking about M1 Finance, so probably going to be bigger changes than normal. But yeah, so we're at $898.45 for the portfolio. Current market gains on the all-time chart are $2.15, 1.15% return. Market gains overall are down 8.26, and earned dividends are $10.41. So not too bad. Going to the 1 week here, pretty big recovery over the previous week, which was mostly red. So again, all time we are back in the green, mostly thanks to the dividends. The market gains are actually negative. Now looking at the pie chart, obviously 2 weeks ago we made quite a few changes. Everything's pretty much on par. Realty income is overweight. Nothing's been bought into there. It's just overweight because we reduced the percentage from, I think it was like 8 or 9% to 5%. So it's going to take some time for that to get back on par. They're not going to sell out of it. M1 Finance will just kind of hold it until everything else catches up. So that's kind of what's going on there. Other than that, in the past 2 weeks, I've not made any other changes. So yeah, we're going to just be looking at how the changes we did make affected the numbers, and then maybe next week we will make another change. So before we look at Simply Safe, dividends for September have completed. We have ended up with $2.88 for the month. I was hoping to get into $3, but again, the additions into Prospect Capital and AG&C were a little bit later, so we won't really see the benefits of that until October. So I'm hoping October will be like $4.50 potentially with those investments, but obviously we'll have to see what it looks like. Overall, though, is a pretty big increase against August. Again, this portfolio started in June, so only 3 full months here, and it's growing pretty quickly. When we started this portfolio, the direction I was trying to move into was to have a monthly dividend portfolio that was relatively balanced and safe. We pretty much proved that we did that, at least in my opinion. So now that it's a side portfolio, I feel like it's just better to kind of drive it towards income. Still want to be obviously reasonable because it is my money and I don't want to waste it or anything, but it is going to be a high income driven portfolio with a little bit more risk. So that's kind of the direction we're heading. Still trying to balance it, especially in the dividend growth category. So let's talk about that. So the last time we uploaded, annual income was $47. Dividend growth was 0.2% and dividend yield was 5.81%. Now income is up to $55 yearly. Dividend growth is negative 0.9% and dividend yield is now a whopping 6.13%. So obviously we've been pushing into higher dividend yield companies, with the negative effect of that being the dividend growth. So if we just do a dividend yield look here. So we bought into Prospect Capital and AG&C. Those were kind of the 2 main companies we bought into. They're the 2 highest yielding companies, but dividend growth has been 0% for the year on Prospect Capital and negative 7% with AG&C cutting down to 10%. So dividend growth doesn't look so great at the 1 year mark, and then this is the past 5 years, how this portfolio would have done. So it's not a lot, but it is still negative, which means the dividends are shrinking over time. But the thing is that's if we don't touch the portfolio. We still deposit in this portfolio, so it will actually be growing at a faster rate than I think the dividends would be decreasing. So I'm not sure how I want to handle it quite yet. It's still kind of early, but overall this should probably still be at least 0. So I'm gonna probably chill this week and not make any changes, but kind of look into what we can buy into that will not only help the yield but maybe help this out, try to get it back to a positive number. But yeah, the first move we made was obviously for cash flow. So actually, real quick, I was just scrolling through. We talked about this on the Robinhood portfolio, but Pembina Pipeline Company is a 9% yield and at 5% dividend growth. And on top of that, it has a high safety score. So we're thinking about buying into it on the Robinhood portfolio next week. We might actually make a change right now and do that for this one as well, because not only is it going to help the yield, but it's also going to help the dividend growth. So I'm going to make an adjustment on that real quick. So for this change, Pembina is already 9% of the portfolio, which is pretty high. I think I'm just going to bump it up 1% and then take a little bit out of these bonds. before I got to here. I guess I didn't realize it was already going to be about 10% of the portfolio. So I don't want any one company to be really more than that. So we're just going to bring it to 10 for now and leave it at that, and then continue looking at other options. But we'll see how this goes over next week. Not a huge change, but subtle changes here and there make it a little bit easier to get the portfolio in the direction you want it to. So for this week, we're going to increase 10% for Pembina, and then 4% lower on the bonds, just because the bonds really aren't doing what they typically are supposed to do. So long term, I'm actually thinking about selling out of these bonds. We'll have to see, but for right now, we're just going to do that quick change there. So that's what the pie looks like for now. I will be sharing the link in the description if you guys want to take a look at the holdings and whatnot. But yeah, that pretty much wraps it up for the update. I am sorry that it is coming out a little late. I will see you guys in the next video.